Corporate conversation going. Shriram Properties saw sales growth of 25% in value terms last year, and they are guiding for a growth of 4.8 million square feet of volumes in FY24, which compares with 4 million square feet in FY23. So about a 20% volume growth is the target that the company has. We're now joined by the Chairman and Managing Director of Shriram Properties now on the show to take some questions. Thank you very much, sir, for joining in. That's the first question. You are anticipating about a 20% jump in your volumes in FY24. Your guidance is for 4.8 million square feet. Where will this come from? Will it be new launches or existing projects? And even Q4, you did face some deferral of 2 projects. Could you tell us if that's going to flow through in Q1 and contribute to this guidance that you've given?
Yeah, absolutely. We had a tremendous growth compared to FY22 to FY23. As you know that we listed the company 2021 December. Since then, quarter on quarter, company is making very consistent progress. And FY23, we achieved about 26% growth on sales, and revenues, we achieved about 57% growth, and PAT moved from about 16-17 crores to 68 crores for the year FY23. For FY24, the growth is likely to continue further. We are looking at from 4 million square feet to 4.8 million square feet pre-sales number to be achieved for FY24. And also, the project recognition is taking place. Last year, in fact, we missed 2 projects on recognition, which is coming into this year, FY24, which will result into a good profitability for FY24. On the pre-sales volume, 2 projects we missed last year, and this year we are looking at about 11 to 13 projects to be launched during FY24. And whatever the 2 projects you have missed last quarter, Q4 FY23, which is getting launched in FY24 Q1. So together about 11 to 13 million square feet, amounting to about 5.37 million square feet. New projects are expected to be launched in FY24. So we are pretty confident, given the macroeconomic situation in the country, given the dynamism with which a country is propelling itself today, we are confident of achieving same 20-25% CAGR year on year.
Okay, got that. And you also said that, you're looking at 11 to 13 launches in the coming year, so in FY24. Can you break that up? How many are going to be in the first half and how many can we expect in the second half of this year?
Roughly about 7 projects will be in first half and 6 projects will be in second half.
You, on an aggregate basis, your pricing was up nearly 8% last year, right, sir?
Yeah. So across, segment, both plotted development, affordable housing and mid-market housing, everything has gone up. In fact, for example, mid-market housing, we witnessed about 20% growth from 5,100 rupees to 6,000 rupees a square feet. We moved. Likewise, affordable from 3,900 to 4,600 rupees a square feet we moved. So we see further increase in selling price to take place, which I have been talking about the same thing to you consistently. So we expect another 8 to 10% increase to take place in FY20.
And this is across categories, 8 to 10% on a blended. Okay.
Across categories.
But are you seeing some hesitancy on the part of buyers because interest costs have gone up? The interest burden will now rise with, so their EMI will start hurting, and plus real estate companies are going ahead with a substantial amount of price hikes now over the last 3 years, 2 years at least.
Basically, demand is driving the entire market. Overall macroeconomic situation is very good, and work from home is over now. People now started coming back in full swing to cities today and offices today. So there is a pent-up demand, particularly on the mid-market housing and affordable housing. I will not say this for luxury housing, and I will not say this to economic weaker section. These two to be addressed very different. Whereas mid-market housing and affordable housing, my estimate is next to 5 to 10 years, there has been a constant demand, and there is a tremendous pressure on cities like Bangalore, Chennai, Calcutta, Pune, Hyderabad. There has been Bombay. There has been tremendous pressure on demand on mid-market housing. So prices will continue to go ahead. On the other hand, you talked about EMI and all that. So that's a very temporary phenomenon. See, consumers today, buyers today know very well that this is a very temporary one. It will come down again. They have seen in the last 5-7 years how the housing finance rate of interest moved up or moved down. So we expect the same thing to have this effect. maybe closer to parliament election, there could be some downward reduction in this home loan rate of interest, or immediately after the elections. So customers are aware about these factors, how it helps them. So it's a long-term view they take. So today, 15 to 20 year view they take. See, in fact, the age of the buyers, home buyers, have come down drastically. It is about 26 to 30 today. Earlier, it used to be about 35, 40. Sometime back, it was 50 plus. So they have about clear 15 to 20 year planning. Hence, EMI is not going to hurt them while making decisions for buying home.
Okay, so since you're saying demand is looking so solid, you're seeing, a good kind of appetite across the board. Can you tell us what your conversion rate looks like right now? Say you have 10 people coming to look at properties. How many are actually, ending up buying these?
Currently, about 18 to 20% is the conversion rate for us. And it is showing some sign of going up. So it's a good percentage. It was about 12-14%. Now it has gone to 18 to 20% now.
Your cost of debt, though, has come down, but it's still quite high at 11.9%. I know it's come down because in the past it was 12.5%, and during the IPO time it was even higher. But do you think your cost of debt can come down even further?
Yes, we have done a lot of restructuring now. We have moved from quite a lot of NBFCs to public sector banks. So debt has come down quite a lot. And you will see continuous decrease in the rate of interest. This has happened despite RBI rate increase. RBI rate increase, as you know, that was about 250 basis point increase. With all that, we have reduced about 200 basis points plus. So in effect, we brought down the rate of interest by close to about 350-400 basis points in effect. So that's continuing further now, and we expect FY24.
How much lower can your cost of debt be, sir? And what is the intergroup borrowing? Two numbers.
It's about 11 to 11.5% today. It can come down a little more during this year.
And the intergroup borrowing?
Intergroup borrowing, no. It's a GD, altogether it's the same rate. There is no intergroup. We don't have any intergroup borrowing.
Okay.
It's all at the project level. And the Shriram Group and Shriram Properties, there is no relationship.
Got it.
All right, so we will wind down on that note, but thank you very much for stopping by and speaking to us. We do hope to have you on the channel soon again. That is the management of Shriram Properties talking.